Good evening, and thank you very much for joining us this evening. This is WEZESHA BIASHARA show, the show where we talk about things that or matters that affect your business, but we go a little bit further and try to find out how can we help your business to grow, even during these very difficult moments when everything is uncertain, sales are slowing down, customers have disappeared, you're not sure which direction to go. But we're here to hold your hand and walk with you so that you're able to manage your business even during this terrible, terrible crisis of COVID-19. In studio, I'm joined virtually by our resident accountant, because we are in that season, and the season is taxation. We are all at that point where we are paying taxes. It's June. The last day of paying your taxes, your annual returns, is June 30th. And so we cannot avoid talking about accounts. I'm joined by Maxwell Kioko, our resident accountant and tax expert, who's going to be talking to us about taxation. What's tax? What are those things? How do we manage them in our business? And how do we run a business so well that KRA does not have to come for our necks? Max, I'd like to kindly ask you to introduce yourself to our audience. Max?
Thank you. I'm Maxwell Kioko. I run a consulting firm called MK Consultancy, and we focus on tax, audit, and bookkeeping. So basically, that's my line of work. Yes, thank you.
Thank you, Max. We are going to be talking about taxation, not just because it's June and we have 6 days or so to finish filing our returns, but because if you actually run a business and you run it properly and profitably, you'll have to pay taxes at some point. The conversation is also going on right now on Twitter. The hashtag we're using is financial reporting. Another hashtag is WEZESHA BIASHARA show. Feel free to drop in onto Twitter, put in your thoughts, your comments, ask questions to our expert so that you can find a way to improve your business. Max, I'd like us to start, of course, by first of all talking about tax. What is this tax all about? If you could just help our audience to begin to, digest this concept from a business perspective.
Tax is the only way that our government, not the only way, one of the ways that the government earns revenue. So it's a way of financing government expenses, and they normally tax businesses so that at the end of the profits, they tax profits of the businesses, and also they tax individuals' earnings in form of pay. So there are different types of taxes involved. We can first start off with the personal tax. If you're employed, the type of tax that you pay, and also if you run a business, which is not a limited company, just a business name, which uses your personal PIN, which type of tax you pay. So from an individual who doesn't run any form of business, let's say individual A is employed, the only form of tax that he or she pays is pay, if they are in that threshold of paying pay, which is normally taxed based on the graduated scale rates. The new tax act, which was effected first April due to Corona issues, it cushioned the minimum tax, the minimum wage that you can earn so that it can be taxed, which is about 24,000 shillings. So above 24,000 shillings, you are taxed based on the graduated scale rates. So that is a person who is employed. So the second type of tax is on this person who is employed or not employed when they run a business. Let's say they have registered a business in Sharia, that's a business name, which normally there's no separation between the owner of the business and the business when you do a business name. So the business is taxed through the owner. The income of the business is taxed through the graduated scale rates, the same graduated scale rates which are used for pay. So those are the two types of taxes when an individual, basically, that individual A is employed and doesn't run a business. Individual B is not employed but runs a business. So they're basically taxed on the graduated scale rates.
Right. Thank you, Max. You have just told us that, taxes that affect you as a person, depending on what you do. The most direct one, if you're employed, you're taxed on your salary. If, of course, your salary right now, according to the new law, your salary is above 24,000 shillings, I believe. If you're not, if your salary is not above 24,000 shillings, it means that you don't pay as you earn. If you have a business, you run a business, there's a separate tax that you're going to pay. And Max is going to be talking to us specifically about the tax for the businesses. But before we got there, I want just to remind us that the conversation is ongoing on Twitter. The hashtag is financial reporting. The other hashtag is pay your taxes. The Twitter handle is Newsline TV. Kindly go to Twitter and drop in your comments, drop in your questions for Max so that you can be able to be clear about this tax business and understand why KRA is very excited in June. And before we go to the business part, Max, I wanted to ask just about an individual. So suppose now, I'm in the bracket of 24,000 and below. Should I now be concerned about doing my annual returns? What KRA is talking about in June 30th deadline and all that. Does that concern me at all as an individual?
Yes, it does. For the income tax return, which is normally done once a year, everyone, it doesn't matter your status, whether you're employed or not. If you don't earn any income, you have to file a nil return. Failure to that, you'll incur some penalties. So it doesn't exempt anyone. As long as you have a PIN, from KRA, that is personal identification number from KRA, you have to file your tax. It doesn't it doesn't matter whether you are earning or not earning. If you are earning, you will declare whatever you earned and how much you paid for payee. If you are not earning, let's say the whole year you didn't earn anything or you are not employed, you have to do a nil return. So it does not. That stands. That's a must. Yeah.
Right. Now let's go to the business part. So now I have a business. Whatever business, what are the standard taxes that I expect to pay?
Now, if you run a business, first of all, this is a business name. It's not a limited company. For a business name, you have to file the returns at the end of the year, and your profit will be taxed based on the graduated scale rates, number one. That's one income tax. It's called income tax. So another form of tax that you can do if you do a business name, it's a VAT. VAT is called value added tax, which currently is 14%. And for this VAT, if you sell services which are VATable, let's say your line of work is VATable, you ought to charge a VAT, and you ought to own, first of all, an ETR. Secondly, you ought to have a VAT obligation under your PIN. And thirdly, every month you have to file, at the end of every month, you have to file your returns, your VATable returns. That is, you have to declare your sales, which are VATable, and also sales which are not VATable. And also you have to declare your purchases, which are VATable. Then when the two are minused, if the end result, like the bottom line, is a negative figure, it means that's a credit. You have to carry it forward to the next month. In short, in layman's terms, it means KRA have your money. And if it's a positive figure, it means you have to pay KRA. So that's value added tax. The next, this is in
Before
terms
you go to the next one, Max, I just want to interject there and ask, how do I know what is VATable and what is not?
How do you know what is VATable and what is not?
Right.
When you purchase something, there are some goods which are zero rated, and there are some goods which are not VATable at all. Zero rated goods, These are goods which have zero VAT. And the finance minister, through a gazette notice, might introduce a VAT on the zero-rated goods. The goods which are not vatable at all, they are non-vatable. They are not zero-rated. So there are other goods which are vatable, 14%, and there are other ones which have special VAT, like fuel, which is 8%. So how do you know? Once you go and purchase something, on the invoice, it will show you, on the receipt that you receive from the purchaser. Let's say if it's a supermarket, at the bottom of the fiscal receipt, it will show you what was taxed and how much the tax was in terms of VAT. So basically at the bottom of the receipt, there is normally a summary of the VAT. If that person doesn't have that receipt normally, for example, like the supermarket one, it's called a fiscalized receipt. If an organization doesn't have, they don't own a fiscalized maybe system for producing such a receipt, they normally have an ETR. So they'll issue you with an ETR receipt. And on the ETR, it will have a summary of whether that item that you had purchased has a zero VAT or it has a special VAT, let's say, for example, the 8%, or it's vatable normally, the 14%. Yes.
Okay, so that's when I am a customer.
When you're a customer.
So suppose I'm the seller, now I'm the person who's selling. I own the business.
When you're the person who owns the business, now when you sell, in order for you to be paid, you have to issue an invoice. The invoice should be accompanied by an ETR receipt to your customer, so that your customer will, the invoice will show the summary of the tax payable, that is the VAT at the bottom. Because remember, when you are the business owner, the tax you are charging is over and above the value of your services. So as a business owner, there's no way there's no way you are losing, because it's called value added tax. Because if according to your service, you are charging probably 100 bob. So according to the way the VAT system is structured, you should charge 14% over and above the 100 bob. So the net amount is 100 bob, and then the amount on top will be the VAT. And you should disclose that in your invoice. And together with that, attach an ETR receipt to your
right.
Issue.
So that's for a business. We are talking about VAT. If you're just joining us, thank you very much for joining us. We are having a discussion about taxation. We are trying to understand, as business people, what taxes do we have and what obligations do we have to the government? And we are asking questions around, you know, what is VAT, which taxes exist, and which ones should we take care, especially when we're running businesses and enterprises. And the conversation is ongoing on Twitter. The hashtag is financial reporting. Another hashtag is pay your taxes and taxation. Those are three hashtags that we're using. The Twitter handle is Newsline TV. And Max, you just talked about one of the taxes that businesses should know, which is VAT. Which other tax should a business be cognizant of?
On VAT, there's something I've forgotten to note, which is very critical. VAT, for a business name, it's not a must you register for VAT. But whereby the tricky point is the people who you deal with are the ones who normally inquire for that VAT certificate. So for a business name, you'll be forced by the market to register for the VAT. Because some customers won't deal with you if you are not VAT registered. So that was very important. I needed to clarify on that. So okay. for a business name also, there's something which is called turnover tax. So turnover tax is when you do turnover tax, you are not required to do the income tax at the end of the year, because turnover tax is final and it's done every month. Turnover tax is normally done on your gross sales. It's a percentage on your gross sales. As per last year, the turnover tax was 3%, but due to in April it was and it was reduced to 1%. You file, let's say your gross sales for month A were 10,000. So for you to remit turnover tax, you need to do 1% of that gross sales of that particular month, and you need to pay it on or before the 20th of the preceding month. So that's turnover tax. And the threshold of turnover, it was raised between, right now it's between 1 million to 50 million. That's the gap. If your gross sales fall in there, so you can register for turnover tax. However much, it's not compulsory. It's optional. So you can either go, if you fall in that bracket, you can go for turnover tax, or at the end of it all, maybe you can also do the annual returns, the income tax, which is declared at the end of the financial year.
All right. So now we've talked about VAT, we've talked about turnover tax, and you're saying these are taxes that apply if your business is registered as a business name. Okay, Max, now let's talk about another tax before we move on to the limited company. Yes, Max?
I need to correct that. For VAT and turnover tax, it's not a must if your business is registered in a business name.
Okay.
So these two types of taxes, they cut across.
Okay.
What really falls under business name is when you are taxed, when you've registered a business name and you do a business. So at the end of the year, if you choose to do income tax returns, the profit will be taxed based on the graduated scale rates as paid. This is the only unique thing with the business name registration in form of taxation.
All right. Okay, thank you for that clarification. Let's talk about another form of tax that businesses will find themselves paying. Max?
Now we can move from the business name to a partnership. A partnership basically is form of, it's when you are more than one, probably the owners of the business. Maybe you can have a partnership between an individual with a company or an individual with an individual. So on a partnership, the difference between a partnership with a business name, a partnership normally have its own PIN. And the similarity between a partnership and a business is that a partnership won't be taxed. It will be taxed the same as the business name. So the profit will be shared according to the profit sharing ratios between the partners. That profit will be taxed on the individual partners based on the graduated scale rates. Again, the same graduated scale rates that are used to tax an individuals, the pay as you earn graduated scale rates. So that's a partnership. A partnership also, it can have VAT on the PIN, the obligation. So it can have VAT, and VAT filing is constant. That is declaring the sales, declaring the purchases, and then doing sales minus purchases on the VAT. If the sales are more, it means the bottom line will be a positive figure, and you'll have to pay KRA. If the purchases are more than the VAT on the sales, it means it will be a negative figure, which basically means that KRA have that money of yours. But KRA won't necessarily pay you that money, so you'll have to carry it forward to the next month. So VAT is still the same. The only different thing is that a partnership has a PIN, but still a partnership can't be taxed. It's taxed on the partners themselves based on the profit sharing ratios.
Okay, Max again is elaborating. He's reminding us that the kind of tax you pay is based on your registration status. Of course, there are those taxes that cut across, like VAT, but depending on your registration status as a business, then you can be able to see which tax you need to be looking into. Remember, we are having this conversation about taxation. What taxes is your business liable?
What taxes should you be paying as a business? When do you pay them? Why are you paying them in the first place? Max is here to help us understand this, and I want to invite you to join into the conversation. The Twitter handle is financial reporting. The hashtag is financial reporting. The Twitter handle is Newsline TV. So Max, now you've talked about the taxes that apply to a business name and the taxes that apply to a partnership. Move us forward to the taxes that apply to a limited company.
When it comes to a limited company, first of all, we'll start with the income tax. Income tax is filed at the end of the year, at the end of the financial year. That's financial year should have 12 months. So an income tax, basically, as at December 31st last year, the rate was 30%. But luckily, the rate has reduced since April. So for this year, the rate will be 25%. But the accounts that we are reporting currently, they are taxed using the earlier rate of 30%. So income tax is basically you do your expenses, your sales, less your expenses, and also less the depreciation. So that's when you get either a profit or loss, and then the profit will be taxed based on a flat rate. As at for last year accounts, the flat rate is 30%. For this year accounts, which will be filed next year, the flat rate will be 25%. So income tax is one of the number one form of tax that a company has. Another form of tax obligation, which a company has, is VAT, the same VAT. Now VAT cuts across. The way it's filed on business name, the way it's filed on a partnership is still the same way. The same way applies in a limited company. So you declare your sales, you declare your purchases, then you net the two. If your sales are more than your purchases, it means in terms of now the 14%, the VAT. Currently, right now, for VAT, it took effect immediately. The earlier rate was 16% as at April, but from 1st April, it changed to 14% due to the president, I think it's he used the president's, it wasn't an act of parliament, but due to the COVID-19 measures that the government enacted to prevent the economy from shrinking anymore, or to revive the economy. So they reduced the VAT from 16% to 14%, which took effect as 1st of April. So VAT basically cuts across, whether a sole proprietorship, whether a company, whether a partnership, it's still the same. Another form of tax that a company now remits, this is not taxed on the company. It's the company is an agent of KRA. It's called pay as you and pay. Remember, at first we started talking about pay. Now this company has employed people, and it's deducting pay on the employee's salary. Now the company needs to remit this amount of money to KRA by 9th of the preceding month. Failure to that, there is a penalty. Now a company needs to file pay, it's called pay returns, which are filed monthly on or before 9th of the preceding month. Another form of tax, we can say, now we are in statutory deductions. They're normally called statutory deductions. We can say they are form of taxes. That is NHIF. NHIF is the National Hospital Insurance Fund, which is also taxed based on, they have their own graduated scale rates as from the low income earner. I think the last person, the least contribution is about 400, if I'm not wrong, to the highest contribution. Now it depends with how much do you earn. Now the employer has an obligation of deducting this amount from employee salary and remitting it to the NHIF. This is normally remitted on the following month before 9, on or before 9. Failure to that, there's a penalty which is charged on the employer, now the company. Another form of statutory deduction is National Social Security Fund, formerly known as NSSF, which also, it's now this one is a flat rate of 6%, which is remitted by the employer. Now, this one is a bit different because the employer remits 6% of the employee, and based on the employee salary, this now 6% comes from the employer's pocket. And also the employer deducts another 6% from the employee salary. So in total, it's 12%, 6% coming from the employer, 6% coming from the employee. Now, the employer normally acts as an agent for NSSF, and the employer needs to remit this amount of money by 15th or on or before the 15th of the preceding month. Failure to that, the employer incurs the penalty, not the employee. These three taxes, if they're not remitted, the employer is the one who incurs the penalties.
Right. Yes.
Yes, continue.
There is another tax that is also quite common, but for some reason it's not talked about a lot, and that is the National Training Levy, something like that, NITA. Would you talk about that also?
Yes, NITA, basically, NITA doesn't cover everyone. It basically focuses on the people who normally do training. So NITA is normally remitted to that organization, National Industrial Training Authority, every month. Also, there is another form of tax which doesn't also cover everyone. It's called tourism levy, which also is remitted to the tourism board. And basically, tourism levy, it focuses on the organization which are under this tax are hotels, people in hospitality. So they normally remit this to tourism levy. So basically, there are some small taxes which are normally remitted to such bodies, but they don't cover, they depend on, or they focus on particular sectors of the economy. They're not universal as like VAT, income tax, or maybe turnover tax.
Right.
That's the difference. Yeah.
Thank you, Max. Very informative. Max has just taken us through the various taxes that you will find yourself having to pay every month.
He'll just be giving us the date shortly. When you have a limited company, he's talked about income tax. Sorry, he's talked about pay as you earn. He has talked about the corporation tax, I believe, that you pay at a certain percentage at the end of the year. He has talked about the value added tax, that's the VAT. He's talked about pay, NSSF, NHIF, and other taxes that apply to a business depending on their sector. For example, the tourism levy, there's NITA, and many other levies that are different depending on your sector. Now, Max, if you could just kindly, just for the sake of our audience, summarize for us the taxes for each legal entity, just very quickly, and then as you summarize, once you're done with that, kindly tell us the due dates for these taxes on a monthly basis.
Started with the individuals. Individuals who don't run any business, the only form of tax probably they pay over and above. Also remember, individuals normally pay VAT. They pay VAT when purchasing items which are VAT on their monthly income. And also it's based on a graduated scale rate. As is effective of 1st April, employees who earn below 24,000, they're exempted from paying pay. And any employees who earn above 24,000, now they are taxed based on the graduated scale rates. Those are secondly, there's business names. Business names, these are individuals still who have registered businesses at Sharia house. Now, in the laws of in the eyes of the law, these businesses, they don't exist separate from their owners. So they are not issued with a PIN. Business name, they normally use the owner's PIN. So for business name, the profits also are taxed. Now, depending on the choice of the owner of the business name, whether they'll choose to use turnover tax or they'll use income tax, which is normally taxed at the end of the financial year, and the profits will be taxed based on the graduated skill rates of the employee. The same graduated skill rates which were used for payee when for the individual who doesn't run any business. So that's one. And there's another form of tax which can be applied for business name, which is called turnover tax. It's normally called TOT. Turnover tax, it was expanded in April to cover, it covers between 1 million to 50 million. So if your business turnover is that amount, it's in that bracket, you are allowed to, and turnover tax is final tax. So the only way of going about it is, first of all, applying to KRA, getting that obligation under you, so that you don't incur penalties on the income tax at the end of the year. Now, turnover tax is final, and it's normally done based on the gross sales. The current rate of turnover tax is 1%. So if your gross rates for, let's say, last month were 10,000, the preceding month, which is, let's say now in June, your gross sales are probably 10,000. You're supposed to remit 1% of 10,000 on or before 20th of July next month, and that's a final tax. So that's turnover tax. Another form of tax, which a business name is normally forced by the market to comply with, because according to KRA, they normally say, according to the Tax Act, if your business, you don't make, it's not a must for you to register for VAT if you don't, your turnover is below 5 million. But at the end of the day, you don't exist in a vacuum, because if you're in a business, you serve other businesses. And these other businesses will demand that you issue them with an invoice which has a VAT. So if you don't have a VAT, you see the market factors or the environment will force you to register for VAT so that you be able to trade with these businesses, because you can't lose a business because of that. So you can go to KRA, iTax, add a VAT obligation under your now personal PIN. And on this VAT obligation, you are required to file or to declare your sales, your income, and your purchases of, let's say, a particular month on or before 20th of the preceding month. If it's the month of June, once the month has ended, you have 20 days, because you need to declare it on or before 20th July. Failure to that, there is a penalty which will incur. So, and on this form of taxation for VAT, is just a net of effect. So you have to declare your sales, declare your vatable sales, declare your non-vatable sales, declare your vatable purchases. Now it will be vatable sales less vatable purchases. If the bottom line is negative, it means you have whatever amount, the negative figure, you have overpaid. So that figure will be carried forward to the next month. But if the bottom line is a positive figure, it means you owe KRA that amount of money and you need to pay that amount immediately. Failure to that, if the 20th passes, that amount of money will start incurring interest with KRA. So we've said for business, also for business name, you might have employees. So if you have employees, you are also supposed to do statutory deductions. That is payee, NHIF, and NSSF. So for payee, it's based on the graduated skill rates. Remember the first individual we spoke about. So this is how it applies. So the business owner will deduct payee based on the graduated skill rates, withhold the amount, and remit it to KRA on or before 9th of the preceding month. The same with NHIF. NHIF, normally they have their own graduated skill rate. The same, so the business name will deduct based on the salary of the employee, and they will withhold the amount and remit it to NHIF on or before the 15th of the preceding month. The same with NSSF, National Social Security Fund. I think malipo ya uzeeni. Now, this is, it's basically 12% according to terms of NHIF, but NSSF, sorry. But this 12% is normally divided into two, the business and the employee. So the business will cover 6% and the employee will cover 6% of on their salary. So the business name will hold this amount and remit it to NSSF on or before the 15th of the preceding month. Failure of this, it means the business will incur the penalties that are normally charged by this organization. That is payee, NHIF, and NSSF. So those are the basic taxes which are on business. So we also covered the partnership. Partnership is more or less like the business name, because partnership, the only difference between a partnership and a business name is that a partnership normally have its own PIN. And the PIN is basically for filing returns. A partnership can't be taxed. It's normally taxed on the partners themselves. So the profit is normally shared on the partnership profit sharing ratio. And then if it's 40-40, 50-50, or depending with the number of partners who own the partnership. So the profit will be taxed on their PIN numbers using the same graduated scale rates for payee. That's for partnership. For VAT, it cuts across the same way it applies in the business name, it will apply in the partnership. Then another form that we spoke about, and also you have to note that these taxes are based on the legality of the organization. Because how a company is registered legally, it will depend with that will be the criteria used to tax it. If it's a business.
Yes, Max, thank you very much. I think you have elaborated a lot about, the taxes and the timings. And these taxes, where Max is saying that they are cutting across. VAT, whether you are a business name, a partnership, a limited company, an individual, you must pay VAT. Sometimes for individuals,
paying it, but you do. Pay as you earn. As long as you have employees, you have to pay as you earn. You must pay NHIF, NSSF, NITA, tourism levy, of course, depending on your sector. Again, Max has talked about turnover tax for businesses that have an income that is below about 5 million or below 50 million, depending on what the law says at the moment. Now, Max, I want to move this conversation to answer some questions that have come through. Given that it's time for for paying taxes, one of the questions that's coming through from one of our viewers is if you could elaborate on the importance of the P9 form when you're filing returns, and whether it's mandatory to have one when you're filing returns, Max?
Okay. Currently, it's not important. It's not a must to have a P9. Initially, it was a must to have the P9 because basically it was just a P9. The definition of a P9 is just a summary of the payee deducted if you're employed for the whole year. That is from January to December. It's just a summary. It just shows that every month how much pay you are deducted, and at the end of the year, the total of that pay that you are deducted, the total of the income that you earned for that specific year. Currently, KRA, they've improved their, not even currently, this started last year, last year but 2018. There's a provision in iTax whereby you can just file, if you don't have any business income, you don't need a P9. You just go to iTax, then file return for employment income only. Now, when you go to that section, it will just show you how much you earned, how much was remitted by your employer to KRA for the whole year, how much in form of pay, and also how much you earned from your employer. Currently, the system is set up, it's not a must to have a P9.
So it's not a must. You don't need a P9 form because all your information is on the KRA website. You just need to log in there and they will, you'll see everything that has been filed against your name. Another question here is a very practical one. Do you have to report income from your side hustle as an individual, I believe?
From your side hustle, basically, can say, first rule number one, we have to be good citizens. Even the Bible says, give to Caesar what belongs to Caesar. So for your side hustle, I believe you have to register the side hustle in order for you to look professional, to be a professional. So you can't just do, to get that professional outlook, you have to register that side hustle. Go to Sharia House, look for a name, register it. I think it's about, if I'm not wrong, I think 1,000 bob to register a business name. So, and at the end of the year, you have just to declare how much you've earned from that side hustle of yours. And also you have to declare your expenses. So if you had any profits, now the profits will be taxed based on the graduated income. For me, I can say, we need to be good citizens and pay taxes, because that's the only way the government can survive. And yes.
Okay, be a good citizen, pay your
taxes from your side hustle, do not hide. And anyway, the truth of the matter is the way things are working right now, if your side hustle is doing very well, then you will be caught by KRA flat-footed, because at some point, you will have very big business, or you'll meet a client who says, I love your service. Do you have an ETR receipt, for example? And that is when KRA will nab you. So as a good citizen and as a matter of good practice, it's good for you to just make sure that you declare all your incomes to the government. We need to sustain the government, that said. All right, another question here. What is withholding tax? And when should it be paid and who pays it?
Withholding tax, first of all, it's done on professional. If you offer a professional service, let's say if you're an auditor, if you're a financial consultant, if you're a consultant of any form, so the person paying you will withhold, if the amount of money they're paying you is over and above 24,000, they ought to withhold 5% of that amount and remit it to KRA as a form of advance tax. Basically, there's a misconception of some people. They normally think when this is done, they've lost that amount of money. That's a misconception, because this is a form of advance tax. So as a business person or as a profession, once that is done, at the end of the year, when you're filing your income tax return, and let's say, for example, you're filing, then you have to pay, you declare profits, your business is doing well, you have profits, and you have to pay, let's say, for example, taxes amounting to 50,000 Kenya shillings. And during the year, there were some clients who withheld 5% off your fee. Let's say you're withholding for the whole year totals to 40,000 Kenya shillings. You see, that's a form of an advance tax. Now, this 40,000 Kenya shillings will be deducted from the 50,000 that you are supposed to pay. Now you'll only pay 10,000. And also, it can be, the withholding can be more than your profits. In this case, maybe your profits is 50,000. Your tax, the amount of tax that you're supposed to pay on your profit is 50,000, and your withholding for the whole year totals to 60,000. In this scenario, you won't pay anything to KRA because you've already overpaid them. Now, the 10,000, which is over and above that you've overpaid, will be carried forward to the next year. So withholding is basically normally deducted on professional services, and the rate is 5%, and it only applies to amount greater than 24,000. If it's below 24,000, no one should withhold the 5% from that service you're rendering. But if it's above 24,000, the person who's paying you is required by law to withhold the 5%. And the only way of doing this, you will withhold it, declare it on iTax, and you'll see it on your iTax side. The common mistake or there's a misconception also about withholding or mischievousness. Let me not say conception, because some businesses, they normally withhold the 5%, but they don't remit it to KRA. So they pay you less 5% of whatever your invoice is, and they don't remit because they need to remit this other 5% to KRA on or before 20th of the preceding month. So you as the individual, you as the professional, you need to follow it up with the business. Because you see, this is still your money, whether paid to KRA or not.
Thank you, Max.
Yeah.
Thank you very much, Max. I think that's a very
good question. And we have more questions that are coming in. Unfortunately, our time is out. But just before we go, what are your final thoughts on the issue of taxation and business? How can we use taxes to keep our businesses sustainable and also to grow them, really?
What I can say, there's a huge misconception of taxes. And as business people, we need to embrace taxes. First of all, as from our first session of bookkeeping, once you do your books properly, you won't struggle to pay your taxes. That's because you see, a tax like payee is normally taxed on the employees. A tax like VAT is value added tax. So it's over and above the quote of your invoice. And for VAT, I need also to elaborate it. I had forgotten that business people, they normally, I think I'll call it tax evasion in a way. It's debatable. There's some expenses which are allowable and some expenses which are not allowable when it comes to tax. So for VAT purposes, allowable expenses, these are expenses which you are supposed to reclaim the VAT to declare as your purchases. These expenses should be expenses which are directly related to your income, not your personal expenses. So some businesses, they normally use some receipts which are not for their business. So there's this a lacuna in the VAT, but due to inability or lack of capacity for KRA, so there's that a small gap for VAT. So when it comes to taxes, the most important thing to note, there are some allowable expenses in taxes, and there are some expenses which are not allowable when it comes to tax. So
thank you, Max, for that very elaborate explanation.
Today we have talked about taxes, and Max has told us that your business must pay taxes. He uses the word embrace. He says we must embrace taxes. I mean, and that's hard. I'm a business person. I don't like taxes, but we must embrace them, because if we manage to pay our taxes properly, then we are able to even grow our own businesses and also grow our country and our infrastructure. Hopefully, that's how it shall work. But he has gone ahead and told us that in terms of taxes, it depends on your legal registration, how your company is registered, whether you're a limited company, whether you are a business name, whether you're a partnership. If you're an individual, the taxation, the taxes you need to be looking at are rather, they vary depending on your business and also depending on your sector. So how do you figure it out? It's a simple answer. Do not go and try to figure it out by yourself. Don't try and reinvent the wheel. This wheel has already been invented by special people. We call them accountants. Get in touch with an accountant such as Maxwell Kyoko. His telephone number is on your screen right now. His email address is on your screen, and his website, mkconsultancy.co.ke. That's where you can find his contact information. Get in touch with him. He will be able to help you figure out the taxes in your business, because if you don't figure out the taxes in your business, KRA will help you figure them out, and it will not be pretty. Really, we don't want to lose our businesses because of taxes. So get yourself an accountant and see how you can sort that matter out. This has been WEZESHA BIASHARA show. We've been talking about taxes, and we are saying we must embrace them, whether we like it or not. Embrace taxes so that you can grow your business. We shall be back again next week. Of course, the conversation until next week is going on Twitter. The hashtag we said is financial literacy, financial reporting, and another hashtag we said is WEZESHA BIASHARA show. Drop in your comments, drop in your ideas, how we can improve the show. Tell us which topic you want us to talk about next time, because we are glad to help you WEZESHA your biashara. My name is Grace Ndunge. I have been your host today. It's been such a great pleasure, and I hope to see you again next week, same time, same channel. Until then, stay safe, and please sanitize.